3, 2, 1, 0. Ignition. Liftoff.
Hi, this is Yuri, and you're watching Moontower HQ.
Hi, my name is Nick. Thanks for joining us today. This week, we'll be talking about chain analysis tools. And starting off, as we usually do, looking at a little bit of history. Where chain analysis tools started off originally actually was a means to try to use blockchain information or information that you could get from the various movements of Bitcoin within the network to actually try to predict and help understand where certain flows would be going to help actually with trading. Now, this was, of course, the first use case for these types of tools, as it was a novel type of technology at the time and information with which you could actually perhaps gain an edge over the competition. So just to kind of give you an example, if you were to see certain flows coming in from cold storage wallets or wallets that haven't moved, that had a long time spent in their wallets moved to these exchanges, you could surmise that perhaps there could be a dump coming onto the market, especially back in the day when these tools kind of started to really take hold, which was 2014 roughly. What you also saw is that there was not that much availability of other types of exchanges. So the exchange space was very limited. There was only a handful of players. So at that time, a lot of the firms that were starting to trade Bitcoin more professionally would try to utilize this type of software or these type of technology to try to actually, again, get a little bit of an edge on the market and predict where these flows were going. However, they quickly found out that it's not so simple, in the sense that just because funds are being transferred from a wallet to an exchange and say, the Bitcoin-based distribution, which is again the metric of how long Bitcoin sat in a particular wallet, was utilized, essentially what you ended up having was still a very difficult time of actually utilizing this for trading because, well, just because, again, those coins moved from the wallet to the exchange doesn't mean they're actually going to get sold. It could very much be some market maker actually topping up their liquidity or balancing their accounts and a host of other types of transactions. So long story short, essentially chain analysis as a means of a trading edge quickly dissolved. And as a result, the companies that created this technology actually started to repurpose their services in a means of more a compliance type of role. Yuri, in your experience in the space, how would you effectively kind of rate this transition from going to trading, to compliance type of roles in these companies? And do you feel that that's really kind of a valuable pivot for them to have done?
Well, there's definitely a transition here, and it's quite a pivot because suddenly from providing valuable service, they started providing services not to Bitcoiners, but to people who want to, let's say, control Bitcoiners and surveil Bitcoiners. Because what essentially chain analytics companies do is they try to analyze all the blockchain and identify essentially all the users of Bitcoin and tie addresses to identities. Now, Bitcoin was never meant to be completely anonymous. It was invented pseudonymous. It means that you have, just like an email address, you have an address that is not tied to your identity. But if you share your identity and say this address belongs to me, suddenly it is tied to you. Now, by default, addresses are not tied to your ID, not to your bank account, nothing of the sort. So chain analytics companies want to facilitate tying of Bitcoin addresses to your identity. The way they do that is by using certain heuristics, certain rules of thumb, by exploring the blockchain and seeing the flow of funds. So for example, when you buy Bitcoin from an exchange that takes your KYC, know your customer documents, for example, your passport, your residential address, they can track those Bitcoins that you bought on that exchange to different locations, such as your personal wallet. And then if you send it to, let's say, a marketplace, they can, with some degree of certainty, say that it was you who spent Bitcoins in that marketplace. Now, it doesn't always mean that this heuristic is bulletproof and it's 100%. No, it's more of a heuristic. Heuristic means a rule of thumb, right? So it's just essentially a guess. And right now, there is a lot of technologies appearing that allow people to mix these transactions and to confuse chain analytics companies and blockchain surveillance teams in terms of who sends money where and to whom. So I see this as a attempt to appease regulators first and foremost, because you know Bitcoin is very, very new, and a lot of the regulators, they don't understand it, and they are really slow to understand things like Bitcoin. As soon as they understand, a very little part of Bitcoin has already progressed by so much that it will take them another couple of years to catch up. So it's in this constant catch-up game. It's really difficult. They're scratching their head, and this is where chain analytics companies come from. They essentially go to the regulator or to law enforcement and say, we will help you understand this better. We will analyze the blockchain data and provide you with a report of what kind of activity happens on the Bitcoin blockchain. And obviously, regulators and law enforcement are happy to hear that, because without blockchain analytics companies, they have pretty much nothing. So they accept this, and for what it's worth, uh, there have been some cases, as far as I remember, where blockchain analytics companies have helped solve some criminal cases where I believe the criminals themselves were not extremely smart with how they dealt with Bitcoin. For example, they could steal Bitcoin and then go to an exchange that asks them for their actual ID to cash out. So that's not a very smart to do that, but at the end of the day, this technology is, I don't think it has merit long term, because people will always find a way. And you have to remember that these are private companies, and they are competing against open source developers who are driven not just by money, but by ideology, and they will always fight back. It is the same battle as the battle for encryption, where the government can put sticks in the wheels and kind of try to stop innovation in that field, but there will always be people who will write code for free and release it publicly, like the famous code for encryption software that was printed on a t-shirt. Try and ban that. You cannot do that, right? So that's my take on it. I think bottom line is that the chain analytics companies most likely work for the government and for law enforcement, but they are not extremely beneficial to actual real Bitcoiners who just want to be left alone and transact.
Yeah, you know what? I would completely agree. And actually, I think it was back in the day when I was working at a fintech incubator that actually there was a company that did chain analytics that was there with us, and started up a conversation with the CEO, and he was quite a bright guy, kind of deep in coding, and he showed me this essentially network map of these relational heuristics that you're talking about, of where all the flows of the bitcoins are coming from, and talked a little bit about it, and I said to him, okay, well, this looks pretty interesting, but like what do you do with this data? What are you going to do? He's like, oh, well, we have some 3-letter agencies that are really interested in this type of stuff. But to me, over time, kind of having seen how these things evolve, is really that is the only use case left. Is exactly what you're talking about. Is from a regulatory oversight perspective, and this obviously has creeped into also other types of regulatory frameworks as well around the world. So, for example, in Estonia, they do require the use of similar software in order to be able to comply. At the end of the day, though, from utilizing this software ourselves, to of course stay compliant within the regulatory framework, we ourselves have noticed that it really doesn't go too far. I mean, it checks the boxes for a certain level of comfort with respect to the regulator, but in reality, there are many ways that exist in the ecosystem exactly for the reason of open source software, and also just because of how far behind I think these companies really are, that exist to obfuscate essentially these types of transactions, and not even with intent, just simply because of how the actual network functions, how HT wallets function as well, and other types of layer 2 technologies, Lightning Network included. It actually makes it very, very difficult and an exponentially difficult task for these kind of chain analysis companies to keep up. So really their only business model, which is, pandering to these regulatory agencies, I think is a losing battle long term. And whether they are able to stay in business or if they're going to have to pivot yet again to some other types of, business models is yet to be seen. But I find that in general, kind of what's really interesting about all of this is the aspect of technological evolution when it comes to blockchain analytics and blockchain technologies in general. And by that, what I mean is exactly because it is open source, the level of innovation that happens is far greater, I think, than an enclosed ecosystem. I think a lot of people say that, Bitcoin time is 10 times faster than normal time. So, a month in Bitcoin is like 10 months in the real world. And I feel very much that's true, having been in the space for quite some time. You do see it grow by leaps and bounds, and technologies open up that you never even would kind of have imagined, even just kind of weeks ago. And I think that's because, again, the developers are very much interested in not only an economical incentive to make the network better and grow these technologies, but also from a ethical as well as a fundamental perspective. So, in the future, as we move forward, do you feel that, in your opinion, these types of chain analysis companies will essentially kind of go away, or do you feel that they're kind of going to be with us to stay, but basically going to be handicapped for the rest of their lifespan until kind of their date comes due?
Yes. Yeah, I think that depends a lot on their sales team and how well they sell the services to the government. So it doesn't really matter how good the technology is, as long as the government agents can be appeased by actually having it and using it. But jokes aside, we will see, because right now they are starting to implement their different strategies on top of the other networks that run on top of Bitcoin. So there's already companies that are starting to surveil the Liquid network. There are companies that are starting to dip their feet in the Lightning network, and they want to try to de-anonymize those types of transactions, which is quite a difficult task if you ask me, because Lightning network works very, very differently from how the on-chain transactions work, because on the Lightning network, there is no public blockchain where you can explore where the funds move. They move in a fairly random order. It's essentially onion routing, where you can send a payment, and that payment can hop through multiple different nodes before it reaches the final destination. So the person who runs the final destination node doesn't know from which node particularly the payment came from. He can only see the previous node that forwarded the payment to him, right? So these are all challenges that blockchain analytics companies will have to overcome, and I think it will get more and more difficult, especially with teams like Samurai Wallet and Wasabi Wallet and others integrating all kinds of mixing and coin joining and pay join services that essentially break the heuristics that the chain analytics companies use today. So when you break these heuristics, and when you add complexity in the form of Lightning Network, or maybe other chains such as the Liquid network, you really, really make it more complex, and it will be a feat and a win for them, I guess, if they manage to somehow de-anonymize users. But at the end of the day, I think it will be more or less unexperienced users who will be de-anonymized by such services, people who really don't care about anonymity, or people who are just not very smart in terms of hiding their trails of transactions, especially if they commit criminal activity on the blockchain. Obviously, they have to take care of such things, and more often than not, that doesn't happen. So we'll see. I think there will be around for the next several years, maybe a decade or so, if they're able to sell their services to government agencies. It will definitely be to their own detriment if they just sit down, discuss things, and accept that they're not able to surveil Bitcoin users anymore. So, the money must flow. They must have clients. They must have investors. They are companies, and they'll do everything they can to stay afloat and be as relevant as they can.
Yeah, definitely. Well, I think one of the more prominent companies in this space actually just raised something around 13.1 million, I believe. And they stated in particular that they're actually going to be increasing their cooperation with the three-letter government agency. So, wish them all the best of luck with that, but it clearly is aligned in one particular direction. And I think to finish off also just on a note in general about why I think this type of anonymity is important in terms of transactional anonymity. And yes, there is certain types of, I believe, criminal elements, especially at the beginning of Bitcoin, that have utilized this type of technology in order to protect, their transactional history, to obfuscate it, to not be caught. But realistically, that's just such a small percentage, in all honesty. Even the chain analysis companies say this as well. I mean, from having used the services, we see how little transactions actually come from that area. Most of the people who advocate for this are advocating for financial privacy. And that's really what it's all about. It's being able to move and transact your funds without having government oversight at every single nth level of the transaction. And I think that's what motivates this space to continue to innovate, all these technologies to come online, is to be able to uphold that freedom. And really, I believe that that's going to win in the long term. And wish again the Analyze company all the best of luck, but they're fighting an uphill battle, in my opinion. So all the best to them. And with that, my name is Nick. Thanks for joining us today, and signing off.
And my name is Yuri, and you're watching Moontower HQ. Check out moontower.co, and see you next time.